Before we start, I'll give a little background on myself. My name is Dave Sabina. I work with a company called Mu Corporation, and we've also started developing software called RDBASE that we use to track the information necessary to claim the R&D tax credits, as well as grants and patents. So I'm going to talk primarily about R&D tax credits this morning, but then we'll add some additional details on grants and patents because the types of information that you compile tend to be very similar for all of them, and we'll talk about that a little more as well. So very quickly, looking at the size of the program in Canada, and there aren't a lot of published details on this. If you look at federal budgets, they don't really disclose exactly how much is going to the SR&ED tax program. The latest expenditures I can find are back in 2008, which basically said that in total, the federal government spends somewhere between $3 to $5 billion a year, depending how you count it. And that takes into consideration the fact that there's something called non-refundable credits. And non-refundable credits are exactly like they sound. They're credits that can be earned but only usable if you owe income taxes. So again, if we give $4.7 billion of credits, maybe not all of them are earned in the current year. Some may have been earned in prior years, and some may be earned in the current year and carry forward. Okay? There's also several provincial incentives. Okay? And some provinces have richer incentives than the others. Quebec, being a notable one, represents approximately 55 to 60% of the total funding, but that is changing recently with the 2014 Quebec budget, and we're going to talk about that this afternoon. Okay, just to get a breakdown of the size of claim participants. Again, the numbers aren't very current on the publications for this, but in 2004, there was roughly 3,400 claimants. The majority of the money went to very large claimants. These are claimants who earn credits at a 20% rate. So they're either public companies or companies that have typically more than $50 million in assets. A remaining roughly 1/3 of the credits, of the $3.3 billion in cash that they handed out that year, went to small and medium-sized companies, what they call qualified CCPCs. And we'll talk a little bit about what that means. So in the total number of claims, if there's 20,000 claimants, roughly 4,000 claimants are the big companies that claim every year and make up 2/3 of the claims. And a growing proportion of the claimants, and this continues to be the case since 2004, represent the smaller, medium-sized companies that get the enhanced credits. So even though there's only 4,000 claimants that represent 2/3 of the cost, the growth is really in the small market of the small and medium-sized businesses. All right, another little quick breakdown of values by size in your course if you're interested. And by industry. So very interesting. Roughly half of the credits are dealt out to the manufacturing industry, which has been shrinking quite a bit. I would assume these numbers are quite a bit less now than they were in 2004. So it'd be interesting to do a comparative analysis. Software makes up roughly 10 to 15% of total claims. And other services, which are generally engineering and technical services, would be roughly a quarter to a third. So those three industries make up a majority of the claims, over close to 90%. Another interesting thing to do is look at how do the Canadian incentives compare to international incentives. And the argument that we face all the time, or politicians face, is should we provide funding to research in general? And if so, more importantly, should it be in the nature of a grant, which is discretionary? They can decide to give you a grant or not decide to give you a grant, depending on how they feel. Or should it be in the form of a tax credit after you do the work, which is different because it's your right to earn that. Once you've entered the tax credit category, the client has a right to claim those credits. Whether the government wants to pay it or not is really irrelevant at that point. So again, two different issues there. What's very interesting is when they talk about direct or indirect funding, Canada is very far on the indirect funding, the tax credits. So they pay you after the work is done. We're probably some of the highest, Canada and Australia. Other countries, such as the United States, spend roughly 3 times as much. In Canada, we spend roughly 4%. The government sponsors 4% of the R&D performed, of the industrial R&D. In the United States, because of defense contracting, it's roughly 12%. So in the US, they get roughly 3 times as much government money to do research as they do in Canada. However, the majority of it is in the nature of grants, not in the nature of tax credits. And the argument will always be there, what's more effective, a grant or a tax credit? I found that there's been very interesting studies done, and we've talked about these in past practitioners' meetings, about what is more effective. Industry seems to like the tax credits, the certainty of the tax credits a little better. But governments and politicians seem to like the grants. So this is going to be an ongoing discussion that we're going to see. Again, if we compare different countries, we can see that Canada doesn't really even hit this list, but that the percentage of direct funding is very high, and the percentage of indirect funding for Canada is the highest proportion of it. Okay, I'm going to start with what is the definition of SR&ED or R&D to begin with. And in Canada, normally people jump into what's the definition in the Income Tax Act, but I'm going to take a step back here and say, well, where did that Income Tax Act definition come from? Did Canada create that, or did we take that from somewhere else? And when I started to look at international R&D credits, so the IRS credit or United Kingdom, and what are the rules, I realized that the wording in our Act is exactly the same wording as in the IRS Code or the Inland Revenue Code in England or United Kingdom. And really, we've taken all of our definitions, a universal definition of what R&D, research and development is, and we've put it into our Income Tax Act. And basically, this international definition was developed in the 1960s in Frascati, Italy. And it was developed by a group called the OECD, Organization of Economic Cooperation and Development. In this meeting, roughly 68 countries got together. I think it was exactly 68 countries. And they developed this international definition of research and development so that they could compare country to country and region to region and make policy decisions. It wasn't created for R&D credits per se. It was created for political reasons. As we look, almost every country who's implemented some kind of grant or tax system has used this definition. They haven't recreated it. We've got this universal definition that says for a project to be R&D, it must be dependent on technological advancement. That's the magic word that we're going to talk about in the Canadian Income Tax Act, and that's where all the arguments are predicated from. Is something representative of technological advancement, or is it not? Or is it routine engineering or common practice or any other definitions? The aim of the project must be the systematic resolution of scientific or technological uncertainty. So this is the international definition. And what we want to do is talk about this, and then we're going to see how it applies to Canadian and other types of work.